Macy's stock is ripping over 20% higher today following the news that Ark House Management and Brigade Capital Management have offered to buy Macy's for $5.8 billion. This is around $21 per share versus the $17 previous closing price for Macy's stock. M is the ticker. So that's why you're seeing this 20% surge in the stock price. And so when I look at the valuation, I see, it's trading even after this jump, trading around 5 times earnings. If you go back a prior year, closer to 4 times, free cash flow based on which year you're looking at, 7 times if you're using management's guidance. If I check in with AI Ticker Chat, first month is free to try to get a framework of how could Macy's actually, deliver what type of returns in the future using AI Predict. What is this potentially even attractive? And because of this low valuation, if they stabilize their operations and they grow and even get into significant improved profitability, you could see significant upside. So this is what I think these buyers are playing for, saying, hey, can we stabilize margins? Can we stabilize the business, even grow it slightly? And if we can, there's hundreds of percent upside and lots of free cash flow, and plus a low valuation multiple that we're starting with. So it's interesting to see that AI identified this as a potentially, compelling pick before you got the buyout offer. And so, that would clearly limit, you couldn't get that hundreds of percent upside if it ultimately does get taken over. But it is an important data point in my mind that, it is filtering for and looking for the right things using analysis to say, hey, is the valuation cheap? If it's stabilized, could you see, attractive returns in the years ahead? That said, Macy's has faced real challenges. And most recently, in the third quarter, the comparable store sales down 7%, total sales down around 7.1%. So you're looking at real challenges for this business, not showing the stabilization that you'd want to see. If I zoom out, on a multi-year perspective, and this is a new table that you're going to see. This is going to be free to any user that wants to check it out. This is at AI Ticker Chat. We're building this out now, so you won't be able to see it right now, but in the next week or two, you should be able to see it. It'll be completely free, which shows the historic financials for any company that you're interested in. And so you can see Macy's, they've had some real challenges. I mean, look at just the last few years, no real sales growth. The only prior year, you saw this jump, in growth, and that's in response to the COVID lockdowns. But you see profit margins are lower than they've been for years. If you're going to zoom out, well, when was the last time they actually had growth? You could see it's closer to a decade ago when they actually posted closer to 5%, organic growth, when you were looking at this. So this is a business that's been lost in the desert, really struggling over a multi-decade perspective. One analyst take, Chris Bloomstrand, he talked about how over the last 25 years, they generated $21 billion in profits, about a quarter of which went as dividends, the remaining 75% for share repurchases. And so it's interesting, $21 billion in profits versus the under $6 billion takeout. So where did those profits go? Clearly a lot of bad buys. He's saying $15 billion in bad buys, saying the share price has really gone nowhere for decades, despite these repurchases, over $12 billion in just terrible, incomprehensible restructuring charges, asset write-downs. This has been a business that's struggled, and it's gone from one management team to the next that really hasn't managed to turn it around in a successful way. And a lot of these buybacks, these billions of dollars in buybacks, well in excess of the current market cap, was occurring at prices above the current price. So management didn't even know what a good value was. So the question is this a potential, successful turnaround from Macy's? Will you actually see it succeed, or will it continue to sort of struggle, become a dilapidated brand further from here? First of all, in full disclosure, this is not financial advice. Also, quick plug, take charge of your investment journey with unrivaledinvesting.com for compelling ideas, real-time portfolio updates, and our exclusive Discord server available for premium annual subscribers. I do plan on raising the rate later at the end of this year, the end of this month. So if you're interested, check that out by the end of this month for the premium tier. So looking at Macy's now, it's trading over $21 a share. It is worthwhile to mention that, if I check the SEC filings, I check Macy's website, I don't actually see the formal press release that says, hey, these are the terms. So at this point, it's based on like CNBC and Wall Street Journal reporting saying this is what the offer is. So I'd like to see a formalized offer. You know, when they approached these bidders, they had no comment. So it is important to understand it's a little bit of a hearsay. This might change subsequent to the publication of this video, so we'll see. But clearly, if it's trading above $21 and the offer is for $21, there is this expectation that maybe the offer is a little sweetened. You know, maybe it would suggest that the deal is very likely to go through, and that maybe you even get something better than what has been discussed. I'm a little skeptical, partly because of the dynamics I just talked about. It's been sort of a business that's been lost in the woods for a long time. You look at their year-to-date results, you see their profitability, you know, has gotten hammered. They've, you know, dropped effectively by half, more than half, from $1 billion, you know, last year to under $500 million year to date. And you could see sales have dropped. So, I mean, even though sales haven't dropped by that, profitability has fallen significantly more. So these are the real challenges that accompany retail. And, you know, management's quick to say, look, we have some initiatives that are slowly, you know, going to turn around this business. And they talk about 5 growth vectors, talking about their private brand, reimagining their various different private brand labels, talking about new smart format off-mall locations. Maybe they can open up new smaller stores. The Bloomie's stores and Macy's stores, talking about how they opened up a small format Macy's in Las Vegas, in Chicagoland, and in Boston. So then they also, you know, talk about a digital marketplace. This is around, I believe, around 30% of their sales. I don't fundamentally view this as unrivaled or changing. Talking about maybe luxury could be a growth vector for them, or personalized offers and communications. I look at all 5 of these and I'm thinking none of these are really unrivaled. None of these give me that conviction that, hey, you are going to be definitively much bigger in the years ahead. Now, maybe they say, hey, this small format really resonates with customers and it really starts working. And so that would be, you know, you would see as a shareholder, okay, let's start seeing the growth tweak up and let's see the margins tweak higher. But given the nature of retail, where it's almost a, you know, fight to the bottom of how low can you cut pricing, it's just extremely difficult. And I feel like the Terminator in the room has still not been addressed. You know, you still have Amazon just gobbling up market share. You have various different e-commerce platforms, direct-to-consumer platforms, you know, gobbling up market share. And so I just view retail as an incredibly tough business. When I'm looking at, you know, a Wall Street legend like Peter Lynch, his success came, he did have turnarounds as part of his portfolio, and Macy's would definitely go under a situation where you're saying, hey, I'm playing for a turnaround. But most of his portfolio, and most of my own personal portfolio, is geared towards finding those companies that have already proven, yeah, we're on this great trajectory, and here's why. And here's this reason why we have a right to win, this unrivaled aspect of our business. So I'm looking at this and I'm thinking, it's just, you know, it's just too hard for me to even consider, you know, like maybe, and keep in mind, if there is a takeover and it does close at 21, you know, it's not like there was any upside that you were playing for. It's not like, hey, we're saying there's a takeover offer at 21 and it's trading at 10. And you go, wow, that's actually pretty interesting. Like, then there's this uncertainty of whether or not it closes, and you're playing for an arbitrage. So I don't really even understand what people are playing for here, other than maybe getting another bid higher, or that you have new management, you know, sort of say, hey, these new initiatives are really going to stabilize and grow the business. I look at this and just, it's in the too hard basket, but I think that there are other plays out there where the financials, the growth trajectory is just much more compelling. If this video has been helpful for you, talking about Macy's and their recent buyout offer, the latest news, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.